Hey guys, Okana here. I'm going to show you a couple of trades that I shared with my group, one from yesterday, one from today, but I'm going to cover some areas like why I use multiple time frames and how you can take trades even without indicators like we do. So let's actually start with the one that I did today, which is here. You can see the guys just also finished. We had approximately 30-minute expiry. Just finished. Mine closed just a few minutes earlier. I'm going to show you that exactly. So it was on the Euro Aussie, which is this pair, Euro and Australian dollar. And so how did we take this trade? It was a put option up here. So why did we know that we could take a trade up there? Let's look at the chart. If you look at it on the hourly, you see there is a resistance, right? From the last time. If you look at this area, I mean, you could go further back. You see it was support before. So you could see that. But in this case, I didn't even need that, because if you go to the different time frames, you see that you can place a target here in different ways. Okay, so let's actually do all of those. So one, you could have done this. You could have drawn a support resistance line based it on the last drop before, or you could have drawn a trend line. I think I haven't tried that. Let's see. Based on these tops here, boom boom, going down, right? If you look at it from here, you can see that. So price bouncing down all the way, and if we remove this arrow, you can see the point of impact. So could have been also that one. Now if we move down a little bit, you can see that your line that you drew on the hourly would have not given you a good entry. You see price actually went above that resistance line. Of course, you could have adjusted it on the lower time frame. So this is why you need multi-time frame analyzers. You couldn't have seen that. So you see one more time. I'm going to show you one more time. So pay attention. On the hourly, we see the resistance, large drop. Now you may say, but why didn't you put it up here? You see, it wouldn't have been of use if I put the line up there. You see, it would be useless. Price didn't get up there. The trend is going like this. So this was the stop. So ignore this one, remove that. So if you only drew your line on the hourly, you would have gotten your entry here instead of up there. Now if you adjusted it on the lower time frame, you would have gotten this one. Now you see it's still not exactly good, but pretty good. I mean, it's a close to round number. You could have adjusted it. You see it's 500. Let me show you here. You see you could just adjust it to the closest round number here, which is pretty decent, as you can see. So that's why. So that's where price got down. So now to remove all these lines, I didn't actually use any of those. I only used this. Watch. So this is what I used. So you see the bounces becoming retracement. This trend line became retracement, and then we got this. So what about expiry? Why did we use 30-minute expiry? Why didn't we enter here? Why did we enter here? Right? Those are the questions you have now. Let me show you on the 1 minute charts where we entered. We actually entered, I entered on this candle, some other, it was pretty much on the opening of this candle, because I got 9, 8, yeah, somewhere around here I got my entry after this first candle. So a few of the other students got a better entry. They got a higher entry than me, actually, because I shared this chart with them. This is why this Skype group, CommuniTraders-Live, is different from other signal services. You actually learn, so you get the targets, you see what we are looking for and why, and what expiries we're looking for and why. So you learn those things, not just, hey, take a 15-minute call, and if you lose or win, you're not going to know why. But in this case, you will, because you get the target, and also gives you the opportunity to get a better entry even there than me, who is giving you the signal. So in this case, some students got a better entry than me. So again, you can see the same line even on the 30-minute time frame, but you see it would have been slightly different to see this very squeezed together. But now when you go to the 15 or 5-minute chart, now it's easier to draw. So the entire purpose of multi-time frame analysis is to get a better look. So again, remember on the hourly we had a resistance, but in this case 5-minute charts was good enough. I didn't have to go to the hourly or daily or any other time frame, so this was good enough. I think we also had an extra confirmation in this case. These are the things I have shown you before. You see here the moving average happens to intercept exactly to the point our trend line. That's very good confirmation, extra confirmation. What about stochastic? I made a video about stochastic. I said things about convergence and divergence. I hope you've seen that. If you haven't, please check that out. You have to know how to use stochastic, not just jump in because something is overbought. So look here, because if you just jump in because something is overbought, you're gonna lose big time. I mean, it was overbought here, why not go for a 15-minute put here? You see, it would have been a loser. So just because something is overbought or oversold doesn't mean that you should take a trade. You should take a trade based on your analysis, based on price action. So you see here, it was overbought, but we had convergence. Remember I talked about convergence of indicators of stochastic, that it's an extra signal, extra confirmation for your signal. So look here, this area was overbought, right? Now let's look at the 15-minute time frame, overbought at the same area. 30-minute time frame, overbought. So this is called convergence, guys. Hourly was still moving up, but we are not taking that long of expiry, right? So we were only doing a 30-minute expiry, so we didn't care. We had 1, 2, 3 time frames being overbought. 1 minute, I don't care about the 1 minute, but of course probably was overbought. Yeah, you can see it was, but it doesn't matter. 1 minute charts don't matter. I even took a trade on the 1 minute one when it was oversold. So that's for the stochastic stuff, but I didn't really use it this time, not much. I didn't really care about it, but they happen to be there, these indicators, but as you can see, they're not needed. So that was the Euro Aussie trade we took today. Another one I shared similar to this one was another put option, but on the Aussie, AUD US dollar. Okay, so here again we took a trade actually in the middle of this candle. I'm going to show you on the 1 minute chart exactly where. So again, why up there? Why here? Why not on this one? Why not here? Why didn't we enter here when this candle got pushed down? You might say, oh, because it was a doji, but that's not the point here. The point is the price action itself. I'm going to show you. If you look back a little, you see on the 15-minute time frame here, again we see a pattern. First drop, second drop, and our entry and expiry here. And my entry, I'm going to show you that on the 1 minute chart when I shared this with the group. So first I wanted to enter. You see this candle came all the way down. I thought it was going to close here so I could enter, but you see it got pushed down the last few seconds, pushed up all the way, but then we waited, so the next one closed down. I think my entry was after this candle closed and this one opened lower here. You can see it opened at exactly here, so lower than before and below the trend line, just like before times you see here. So again, we use the same expiry as before. So these are things that take time to master. Okay guys, thanks for watching. If you want to learn all these things and advanced trading techniques using naked charts, join CommuniTraders Live. Skype group. Information is in the description. You can just follow that, and I will see you next time.